U.S. crude oil prices surged by more than 7% today, experiencing a dramatic spike as fears intensified over potential disruptions to global supply originating from Iran. This significant jump in oil benchmarks is a direct response to escalating geopolitical tensions in the Middle East, particularly following recent events that have heightened concerns about the region's stability and its critical role in the world's energy supply chain. The sudden increase immediately sent ripples through global markets, raising the specter of inflationary pressures and economic uncertainty worldwide. The primary driver behind this sharp price increase is the recognition that any conflict or significant instability involving Iran could severely impact the flow of oil. Iran is not only a significant oil producer itself, but its strategic location, especially its proximity to the Strait of Hormuz, makes it a pivotal player in global energy security. A substantial portion of the world's seaborne oil passes through this narrow waterway. The mere threat of disruption, whether from direct military action, retaliatory measures, or the general increase in regional risk, is often enough to trigger a sharp rise in prices as traders factor in potential shortages. This situation has been exacerbated by existing tight global supplies and the ongoing demand recovery, leaving little room for error in the supply chain. For consumers, a sustained increase in crude oil prices translates directly to higher costs at the pump and increased expenses for goods transported via fossil fuels. This can fuel inflation, erode purchasing power, and potentially slow down economic growth by increasing operational costs for businesses across virtually all sectors. Governments and central banks will be closely monitoring the situation, as prolonged high oil prices could force difficult policy decisions, potentially impacting monetary tightening strategies. The market's volatile reaction underscores the fragile balance of global energy supply and demand, and the profound economic consequences that even the threat of disruption in a critical region like the Middle East can unleash. The world economy now watches closely, hoping for de-escalation that could stabilize prices and prevent further economic turbulence.